Imagine stepping into your kitchen, maybe grabbing that favorite wooden spoon. Not just for another batch of, say, amazing strawberry jam, but thinking, this could be a business. This deep dive is exactly that, your complete step-by-step instructional guide, really, to help you turn that passion into a bustling market stall. We're looking at selling fruit spreads at farmers markets. We think it's pretty much the ideal starting point for food entrepreneurs. Our mission today, walk you through every single detail, from setting goals to tracking success, making sure you're equipped for your own journey. We'll unpack the how-to, the why, and, what to expect.
Yeah, and what's really interesting here is how farmers markets sort of distill entrepreneurship down. It makes it manageable, hands-on, and actually quite forgiving. It's almost a perfect foundation for building a food business, especially when you look at the strategic advantages right from the get-go.
That's a really key point. It feels like a low-risk way to test out some big ideas, doesn't it? So let's start there. Why are farmers markets, well, your jam or fruit spread? What makes them such a sweet start?
Okay, well, the first thing, and maybe the biggest thing, is that direct consumer connection. You completely cut out the middleman.
Yeah.
And the real power there isn't just like getting feedback. It turns every single sale into this real-time, zero-cost market research lab. Think about it. You get immediate, totally unfiltered feedback on flavors, packaging, even your pricing, right there. This direct line lets you build real brand loyalty, through talking to people, telling your story. You can adjust things super quickly based on what customers actually want. And often, because of that personal touch, that sort of artisanal feel, you can command slightly higher prices. Plus, and this is huge, it's a perfect chance to collect email addresses for future marketing. Invaluable, really, for long-term growth.
So it's more than just selling jars. It's like a constant free feedback loop. Wow, big companies pay a fortune for that kind of insight. That makes total sense. And the other thing that always surprises me is how easy it seems to actually get started. That lower barrier to entry. It feels like a real game changer.
Oh, absolutely. The genius isn't just that it's cheap to start. It's how it kind of de-risks the whole thing. You're not immediately drowning in requirements for UPC codes or fancy retail packaging or big marketing campaigns. The money side is way lower. Booth fees, typically maybe $25 to $150 a day, makes testing the waters affordable. Plus, most states have these cottage food laws now. Basically, legal frameworks letting you produce small batches right from your home kitchen. That's massive. And inventory. You don't need a warehouse. Starting with just, say, 2 or 3 dozen jars for a market. Totally fine. And the schedule's flexible. You can keep your day job or other income streams while you build this up.
It really knocks down a lot of those excuses people have for not starting, doesn't it? It's almost like a mini business incubator. Actually, if you're smart about it, these markets are like your own personal focus group, a hands-on research lab.
That's exactly the right mindset. You can try out new flavors with hardly any risk or investment, get instant reactions, change things fast. You can play around with different prices, different packaging options, see what clicks with your customers. It's also perfect for checking out the competition, seeing what they're doing. You spot seasonal trends. And you hone your sales pitch based on actual conversations. Every chat is a data point. Helps you improve your product, your approach, with incredible speed.
What a smart way to operate. Dynamic learning, not just selling. And it's not just you selling in a vacuum, right? It's about becoming part of something bigger. That community aspect seems really important too.
It really is. Now, the successful vendors, they become part of the local food scene. And that opens up amazing networking opportunities. Think about cross-referrals. A cheesemaker might say, oh, you need preserves for this, go see them. Or a baker might use your fillings. You can buy ingredients directly from the farmers right there. Boosts your quality, builds real connections. There are chances for joint marketing. You share customers, get involved in local food events, and all that community building. It builds a reputation that can eventually lead to wholesale deals with local restaurants, specialty shops, expanding your reach way beyond the market stall.
That's a fantastic foundation. Okay, so we've got the why. The opportunity is clear. Now, for you listening, before you start stirring that next batch, you need a really clear vision. What does success actually look like for you? It's not just making and selling jam. It's about strategy, defining your recipe for success with clear business goals.
Exactly. And to help with that, it's useful to think about different scales of ambition, different levels of commitment. Let's walk through, say, 4 distinct business models, each with its own characteristics, its own benchmarks, helps you figure out where you want to aim.
Perfect. Let's hear them. Lay out these pathways.
Okay, first up, the side income model. This is for someone maybe looking to make $200 to $800 a month. Characteristics, usually doing 1 or 2 markets a week. Production fits around your other commitments. You'd focus on maybe 3 to 5 core reliable flavors. Minimal equipment needed, probably just using your regular kitchen stuff. Success here looks like covering your costs plus a decent profit margin, say 40–60%. Selling maybe 20–40 jars consistently per market day. Building a small base of repeat customers, maybe 15–25% time-wise. Probably looking at about 8 to 15 hours a week.
That sounds really achievable for a lot of folks just starting out, or maybe someone who wants to keep their main job. A great way to dip your toes in.
Definitely. Then you can scale up to the sustainable small business model. Now we're aiming higher, maybe $2,000 to $5,000 monthly. This usually means more markets, maybe 3 to 5 a week. You will need more structured planning, especially around seasons. You'd expand your range, maybe 8 to 12 flavors, including seasonal specials. You'd likely invest in some better, maybe commercial-grade equipment to be more efficient. Basic branding becomes important here, like a simple website, being active on social media. Success benchmarks. Higher gross margins, maybe 65–75%. Average sales hitting $300–600 per market day. Repeat customer rate creeping up to 25–35%. And building an email list, say over 200 subscribers. This is a bigger time commitment, maybe 25–35 hours a week, probably more during peak seasons.
Okay, that's a significant jump. That could replace a part-time job or be a serious chunk of household income. What about aiming even higher?
Right. Beyond that, you've got the wholesale and retail expansion model. Here, you're targeting $5,000 plus monthly income. This needs a more premium feel. Unique flavors, really professional packaging. You're actively building relationships with restaurants, specialty food stores. You might even look into co-packing, where another company makes or packages your product for you, or renting space in a commercial kitchen. You need a strong brand identity, solid inventory management across different channels, market, online, wholesale. Success looks like wholesale making up a good chunk of your revenue, maybe 30–50%, getting into 10+ retail stores. And your market sales averaging maybe $800 plus per day. This is definitely a full-time job, often well over 40 hours a week. You might even need to hire help.
So the farmer's market becomes a launch pad there, not necessarily the end goal.
Interesting.
You mentioned one more model focused on innovation.
Yeah, the brand development and testing ground model. This one's less about immediate big sales and more about proving a concept, moving market viability for something new. Characteristics here. A laser focus on unique flavors. Lots of customer feedback collection for quick changes, professional photos and branding right from the start, detailed research on pricing, packaging. The goal is basically building proof of concept for potential investors or maybe bigger retail buyers down the line. Success benchmarks are things like validating product market fit, seeing growing interest in sales, maybe getting some media attention, definitely interest from retail buyers, and showing that your unit economics work, that they're profitable and scalable.
Incredible. Having those distinct models really helps clarify what you're actually aiming for. It gives you a clear target. But okay, you've set your goals. How do you know if you're actually hitting them? It all comes down to the numbers, right? This is where we get into the crucial details of tracking. Measuring your sweet success needs key metrics, right, from day one.
Exactly. And the next critical step is knowing what to track, specifically. And just as importantly, why these numbers matter. Let's start with sales performance metrics. Obvious one first. Sales per market day. You need to track total revenue, sure, but also number of jars sold and your average transaction size. This shows you daily trends, seasonal ups and downs, overall growth. You can compare different markets, which one is best, maybe even figure out sales per hour to see how efficient your time is.
That paints a really clear picture of what's selling, where it's selling, and how well you're doing it.
Precisely. Then dig deeper with units sold by product. Which flavors are your best sellers? Know what to make more of. It also flags seasonal favorites, points out the slow movers maybe need to rethink those and drop them, and it tracks how well new products are being adopted. Guide your innovation. And price point analysis. You can test different prices. See how it affects sales volume, that's price elasticity. Compare your prices to competitors. Helps you refine your positioning and how customers see your value.
So much you can learn just from sales figures, but it's not just product, it's people buying it. How do we track those relationships, build that loyal following?
Right, customer relationship metrics. The repeat customer rate is absolutely key. What percentage of people buy more than once? You can track this with email signups, maybe a simple loyalty card. A good benchmark is often like 25–40%. If it's lower, maybe there's a pricing issue, you need to stand out more. Then there's customer acquisition costs. How much does it cost you to get a new customer? Factor in sampling costs, flyers, any promotions. Compare this across different methods. You need to know if your spending makes sense long term. And finally, email list growth. Try to get maybe 10–20% of your customers signed up. Track how many open your emails, click links, and actually come back to buy. It's a great indicator of your brand's momentum.
That's really powerful for building loyalty. Okay, what about the practical side? Making the stuff, selling it efficiently, operational efficiency metrics.
Yes, operational efficiency metrics. First, know your production cost per unit. Track everything. Ingredients, fruit, sugar, pectin, jars, lids, labels, and crucially, don't forget your labor. Prep time, cooking time, packing time, plus a bit for overhead utilities, equipment wear and tear. Next, time investment return. Basically, what's your effective hourly wage from this business? Track improvements and how long things take. Identify bottlenecks holding you back. Lastly, inventory turnover. How fast does stuff sell once you've made it? Track days from production to sale. Figure out optimal batch sizes to reduce waste. Understand the cost of holding on to slow-moving stock.
Wow, okay, those specifics really make a difference to the bottom line. Turns it from just a craft into an actual optimized business. Beyond your own operations, how do you figure out where you stand in the market and your potential to grow?
Good point. That's market position and growth metrics. You need some market share assessment. Roughly estimates total jam sales at your market. What's your slice of that pie? Keep an eye on competitors. What are they offering? At what price? Helps you find ways to stand out. Look for brand awareness indicators. Are people mentioning you on social media without you asking? Word-of-mouth referrals? Website visits? Are stores asking about wholesale? These show your reputation is growing organically. And think about geographic expansion potential. Maybe test a market in a different neighborhood. Carefully track travel costs versus revenue potential. Look for seasonal markets, but always keep your production limits in mind.
That gives you that strategic bird's eye view. Awesome. And finally, the big picture. Financial health. What's non-negotiable to track there?
Right. Financial health metrics. Super important. Your gross profit margin. Track it closely. Aim for maybe 60–75% for sustainability. Monitor trends across products and markets. Cash flow management. You have to track the seasonal ebb and flow of money. Manage payments if you start doing wholesale. Plan ahead for buying equipment. Know your working capital needs. And break-even analysis, absolutely key. Calculate the minimum sales you need at each market just to cover all your costs. Know your fixed costs versus variable costs. Use this to decide if a new market is worth it or to help set your prices.
Phew, okay, that is a lot of numbers. But you can see how essential it is for making smart decisions, driving the business with data. Now let's bring it back down to earth a bit. Building any business takes time. Managing expectations is just as vital as tracking sales. We need realistic timelines and understanding of seasons, how markets themselves change over time.
Absolutely critical next step, managing expectations. Let's talk timeline for profitability. Months 1 to 3. That's usually the learning phase. You're nailing down maybe 2 or 3 recipes, honestly. Expect to lose money initially. You're buying supplies, figuring things out. Sales might be small, maybe 10–25 jars per market. The real focus is getting feedback. Months 4 to 8, that's the growth phase. Sales pick up maybe 25–50 jars. You introduce seasonal stuff. You should start seeing consistent profit on your direct costs. And you're actively building that email list. By months 9 to 12, you hit the establishment phase, selling maybe 40–80 jars consistently. You've got a solid base of repeat customers. Operations are profitable. You might even start getting those first wholesale feelers.
So definitely a marathon, not a sprint. Clear stages, clear benchmarks. Makes sense. And seasons. They must play a massive role in fruit spreads, right?
Oh, huge. Seasonal considerations are vital for planning. Spring March to May, often a bit slower sales-wise. People want fresh stuff. But great time for unique things like rhubarb. Good time to maybe test a new market. Summer, June to August. That's peak season. High volume. Tourist markets, festivals are buzzing. You get the best local fruit then, too. Fall, September to November. Strong sales again. Gifts, people stocking up for holidays. Opportunity for premium gift sets. Think apples, pears. Winter, December to February. Usually slowest for market sales. Focus on comfort flavors, gift packaging. It's also prime time to work on developing those wholesale relationships.
Knowing those rhythms lets you plan everything, production, marketing, even your own time. Optimize your effort. Okay, and last piece, how do the markets themselves sort of mature in terms of how customers engage?
Yeah, understanding market maturation patterns helps set realistic growth expectations. When you first start initial market entry, expect maybe 6 to 8 weeks just to get noticed. Being there consistently, offering samples, crucial. Price sensitivity is usually highest then. Then the market establishment phase, maybe months 3 to 6. That's often when you see the fastest growth. Customers start asking for specific flavors. Word of mouth really kicks in. You can start testing slightly higher prices. Finally, market maturity. After maybe 12–18 months, growth tends to level off a bit. You'll have a strong, loyal customer base, provides consistent income, and it's a solid platform if you want to expand into wholesale or other markets.
Wow. We have really covered the whole journey, haven't we? From those first connections at the stall to the really detailed numbers that track success. This deep dive truly has given you, our listener, a complete instructional roadmap. Every single detail needed to turn that delicious passion into a real venture.
Which really brings us to a final thought for you listening right now. Given all these practical steps, all these strategic angles, what one metric, or perhaps which business model goal, will you prioritize first? And how will focusing on that one thing define your very first concrete step into this bustling, delicious world of farmers markets?